Every time someone calls XRP a scam, they are revealing something. But what they're revealing has nothing to do with the asset and everything to do with themselves. What I'm going to walk you through is what their criticism actually exposes and how they think, and also why they're following the exact same script every generation of investors has followed when infrastructure gets built quietly in front of them. And then last, how to recognize the pattern so you do not end up on the wrong side of it. Now, I'm Camila Stevenson, and around here we talk wealth, and I want you to go ahead and like the video and subscribe if you have not already so you do not miss what is coming next. I will continue to update you exactly on where we're headed in this economy and how we can position ourselves for financial freedom in this wealth transfer, which is the biggest wealth transfer in our history. Now, if you don't mind, drop in the comments and tell me what you've learned about what most people's number one reason that they say XRP is a scam is. What is that number one reason? Why are they saying it from what you're hearing? I can tell you for me personally, one of the reasons is that the price hasn't gone up. That's pretty much it. And so I want to talk about that, but I want to hear from you and hear what you've been experiencing as well. Now, when someone says that XRP is a scam because the price has not moved, they're not actually saying something about XRP. They are revealing how they personally evaluate assets. They're showing you their entire investment framework in one sentence, and the framework is broken in several specific ways. I'm going to tell you which ways they are broken. The first thing that their criticism reveals is that they only look at the price chart. They do not look at the architecture being built underneath the asset. They do not look at the regulatory milestones that have been clearing one after another, and they do not look at institutional partnerships that have been forming behind the scenes. They look at one variable, and that is the price, and they judge based on whether that one variable has moved. And that is not an analysis. That is a reaction. And reaction is the cheapest currency in financial markets because anyone can do it. The second thing that it reveals is that they do not understand the difference between retail timeframes and institutional timeframes. Retail expects results in weeks, maybe months. Institutions do not work that way. Institutions build over years and decades. The infrastructure that becomes valuable in 2030 has been put in place in 2024, 2025, 2026, and beyond. Anyone judging XRP in 1 year price chart is using a yardstick that does not measure what is actually being built. The third thing it reveals is that they have not done the work to understand what XRP actually does. They do not know about corresponding banking, which is the slow and expensive network of middleman banks that handle every international payment in the world today. They do not know about cross-border settlement friction, which is the days and the fees that get added every time money moves between countries. They do not know about the bridge liquidity problem that XRP was specifically designed to solve. So when they evaluate XRP, they have nothing to evaluate it against. They're judging something that they have never bothered to understand. The fourth thing their criticism reveals is that they confuse silence with absence. Because nobody is shouting about XRP on the financial news every single day. They assume that nothing is happening. But institutions, they never shout. They do things quietly. The biggest moves in finance happen in compliance committees, in bank boardrooms, in regulatory foulings, in private partnerships that get announced quietly months after the work has already been done. The silence is the signal, not the absence of one. The people who built the most important infrastructure of the last 50 years did it quietly, and the public never knew until the repricing had already happened. But the most important thing their criticism reveals is something deeper. It reveals that they do not understand how infrastructure repricing actually works. And that is what I want to spend time helping you to understand right now, because when you see this pattern, you will recognize it everywhere. So let's get into this. Markets systematically undervalue infrastructure assets right before those assets become systematically important. Every single time. This is not my opinion. This is documented financial history that has played out in front of every previous generation of investors who refused to see it. Let me give you 3 examples that prove the pattern beyond argument. Go back to the 1800s when Thomas Edison and George Westinghouse were building the first electrical grid across America. Most people at the time thought electricity was a novelty. They said that gas lamps were good enough, and they said that electricity was dangerous and unreliable. The critics of that era looked at the infrastructure being built and called it a waste of money. Why would anyone need to wire up an entire country for something that already worked fine with gas? The investors who funded the early electrical infrastructure built generational wealth, while the people who dismissed it ended up buying their electricity from the very companies they had refused to invest in. The pattern played out exactly the same way every single critic should have predicted, but could not because they were using the wrong framework. They were looking at the cost and the disruption, not the inevitability of what was being built. Now let's move forward to the 1980s and early 1990s. Cellular networks were just being built. The first cell phones were huge. They were expensive and joked about constantly. Most people said that cell phones were a niche product for executives that would never replace landlines. Critics said that the infrastructure cost of building cellular towers across the country was too high and the technology would never scale to ordinary people. They were absolutely certain. Today, nearly every adult on the planet carries a cell phone in their pocket. And the companies that built the early cellular networks captured trillions of dollars of value while the critics watched it happen from the outside. Same pattern. Quiet build, loud critics, eventually indispensable. Massive wealth captured by the few who saw it early enough to position. Then there is the internet itself, which is maybe the easiest one to feel in your gut because most of you remember when this was happening. In the 1980s and into the early 1990s, the internet was an experimental protocol that academics and government researchers used. Most people thought it was a niche tool that would never affect their everyday lives. Critics looked at it and said nobody outside of universities and the military would ever need it. They said it was too technical, it was too slow, and too disconnected from how real people lived. Then, within a single decade, it became the foundation everything we do online sits on top of. Email, banking, shopping, communication, entertainment, all built on top of infrastructure that critics said nobody would ever use. The repricing happened so fast that most of the public didn't even realize what had occurred until the wealth had already been captured by the people who saw it early. Now apply that same frame to XRP right now. Quiet adoption that is accelerating every single quarter, real utility being proven behind the scenes by the largest institutions in the world, JP Morgan settling treasuries on the XRP ledger, Ripple acquiring $1 billion corporate cash management company, Goldman Sachs disclosing a multi-million-dollar position in XRP investment funds, $100 trillion cross-border payment being solved by the infrastructure being built underneath this asset. The exact same pattern playing out in real time in front of our faces, except most people watching cannot see it because they're using the wrong framework. The people calling XRP a scam right now are following the same script that critics followed in every previous infrastructure cycle. They looked at the early days of the electrical grid and called it a waste of money. They looked at cell phones and called them a toy. They looked at the internet and said nobody would ever need it. They were wrong every single time. And the people who listened to them were wrong with them and missed every single repricing event of their generation. Here is the part that nobody wants to really admit. The critics are not wrong because they are stupid. They are wrong because they are using a framework that does not measure what is being built. That framework is retail. The framework that actually captures infrastructure value is institutional. Until they change their framework, they are going to be wrong about every infrastructure cycle for the rest of their lives. They're going to miss the next one and the one after that. And they're going to keep blaming the asset instead of the lens that they keep using to look at it. So the next time someone calls XRP a scam, you don't have to argue with them. You don't need to defend the asset. You can just smile and recognize what they're actually telling you. They are telling you that they do not know how infrastructure repricing works. They are telling you that they are using the same framework that they have been using every single time for the last 100 years. They are telling you that they will not see this coming until the repricing has already happened and the position window has closed. That is not your problem to solve for them. That is theirs to figure out before it's too late. Now, here's what that means for you. If the pattern is real and 4 decades of financial history says it is, then the question is not about whether the repricing arrives. It is about how it's going to be structured when it does. So picture yourself 5 years from now. The infrastructure has finished maturing. The repricing has happened. XRP is no longer being called a scam by anyone because the system has done its work and the institutions have repositioned the entire market. You are now sitting on a position that is worth multiples of what you paid for today. All right. If you also want to customize your plan and learn a little bit more about how you can get clear on, what portion you should give to maybe physical metals, what portion you should give to cryptocurrency, maybe the stock market, maybe real estate. If you're not sure and you don't have a game plan on even how to protect your assets, where to start, how you should organize your estate, then that is what my clarity calls are for. We leave you with real clarity, all the resources you need, all the actions that you need to take, and everything is right there mapped out for you as we sit down and work on that together. We are all in there winning. And I mean that with every part of my heart. We are winning at life, because finances is not all that is important in this world, right? Finances is a part of the life that you're experiencing. But we want to make sure that your experience of life makes sense, because if it doesn't, you'll find yourself still not experiencing the abundance of life. Life is to be experienced in abundance. And so we deal with a holistic viewpoint of all things pertaining to life that can lead you into success, your well-being, and financial freedom. And so the link is in the description for both of those. And again, drop in the comment, what is the strongest argument that you've heard from someone calling XRP a scam? I really want to hear what you got to say about this. And I think other people want to hear because they go straight to the comments. All right, like the video if it added value, and subscribe if you have not already. And as always, I want you to stay wise, stay wealthy, and I'll see you in the next video.